Welcome back to Insights That Matters. You know we love a good deep dive, and today we're taking a look at a company that's really shaken things up in the Indian housing finance market.
Oh, yeah. This one's exciting.
Now I've got a financial whiz with me who can help us make sense of it all. So what is it about this company that's got you so intrigued?
Well, for me, it's how they're tapping into the incredible growth in the Indian housing market, especially in those tier 2, 3, and 4 cities. You know, the ones beyond the big metros. There's a ton of potential there.
Okay, hold on. I'm already hooked. Housing finance, tier 2 cities.
Yeah.
I need more details. Give me the numbers. Is this a small startup or a major player?
Definitely not a startup. They've been around, but their growth is what's really catching everyone's attention. Their assets under management, basically the total value of loans they've given out, it's grown by 27% in just a year.
Whoa, 27% a year.
Yeah, it's pretty remarkable. And that puts them at almost 10,000 crore rupees.
10,000 crore.
Yeah.
All right, for our listeners outside of India, that's roughly 1.2 billion US dollars. This is no small operation.
Exactly. And the thing is, they're not just growing fast, they're doing it really efficiently.
You mentioned efficiency before. What makes them so good at it?
It all comes down to their company culture. They've got this frugal culture where everyone's laser focused on keeping costs down. Their operating expense ratio is incredibly low.
Low operating costs, that's great for the bottom line. But I'm curious, are they cutting corners somewhere? Are they sacrificing quality or customer service to achieve that?
That's the interesting part. They're actually not. They've managed to stay lean and efficient while also leveraging technology to streamline their processes.
Ooh, technology. Now you're talking. Tell me more. How are they using it to their advantage?
Think referral apps, targeted social media campaigns, and they've even launched a brand new mobile-first platform for managing leads.
So they're really embracing the digital world.
Absolutely. It's paying off, too. About 20% of their business now comes from these digital channels.
Smart move. They're meeting their customers where they are. But with all this growth and innovation, they must need some serious funding. Where's all the money coming from?
They've got a really smart, diversified strategy going on. Bank loans, bonds, funding from the National Housing Bank. They're even using securitization. It's like they've got all their bases covered.
Diversification.
No.
That's always a good sign, especially in a dynamic market like India. But are they passing those funding costs on to their customers? What kind of interest rates are we talking about here?
No, this is where their commitment to affordability really shines. They primarily offer fixed-rate loans, which means their customers are protected from any sudden interest rate hikes.
Fixed-rate loans? That's great for borrowers, especially in times of economic uncertainty.
Right. And a huge chunk of their loans, something like 80%, are fixed rate. So they're really putting their money where their mouth is when it comes to affordability.
That's impressive. But with all this lending, they must be taking on a fair amount of risk. How are they managing that?
Well, they're very strategic about it. They primarily focus on secured loans, which means there's collateral backing them up. If a borrower defaults, they've got something to fall back on.
Secured loans. That makes sense. It minimizes their exposure. But are there any other ways they're mitigating risk?
Oh, yeah. Their choice of location is also key. Remember how we talked about them focusing on those tier 2, 3, and 4 cities?
Yeah, those up-and-coming areas.
Exactly. Those markets tend to be a bit less volatile than the major metros, so it's a smart move from a risk management perspective.
So they're finding that sweet spot. High growth potential, but lower risk. I like it. But we keep talking about this frugal culture and low operating costs. Does that mean they're skimping on employee compensation?
Actually, that's one of the most interesting things about this company. They have a very unique approach to employee compensation, one that really incentivizes both quality and quantity of work.
Okay, now I'm really intrigued. Tell me more. How does that work?
Well, before we get into the specifics, I think it's important to understand the regulatory landscape they're operating in.
You're talking about the lending industry in India, right?
Right. There's been a lot of talk lately about certain lenders engaging in practices that aren't exactly customer-friendly. You know what I mean?
Oh, yeah. The predatory lending practices. Those sky-high interest rates that can really trap people. It's a big problem.
It is. But this company is doing things differently. They're all about transparency, responsible lending, and making sure their customers fully understand the terms of their loans.
So they're setting a good example for the industry.
Exactly. They're proving that you can be successful and ethical at the same time. They're playing by the rules and still thriving.
That's fantastic to hear. But now I'm really curious about this employee incentive program. You were about to tell me about it.
Right. So what they've done is they've created a system that really ties employee rewards directly to the company's overall success.
So it's not just about individual performance. It's about everyone working together towards a common goal.
Exactly. It's not just about hitting sales targets. It's about making sure those sales are high-quality ones, that they lead to happy customers and long-term growth for the company.
So quantity, AD, quality. That's a winning combination. But how do they actually measure and reward that quality aspect?
They've got this really interesting multifaceted system that looks at several factors. Things like customer satisfaction, loan repayment rates, even the long-term performance of the loans that each employee originates.
So it's a much more holistic approach than just looking at the immediate numbers.
Yeah, they're really thinking long-term, which is great to see.
It definitely seems like this company is doing a lot of things, right?
Yeah.
I'm curious, do you think their model could be replicated in other markets? Maybe even outside of India?
That's a great question. I think there's definitely potential for their model to be adapted for other emerging markets, places that share similar characteristics with India.
What kind of characteristics are we talking about?
Think about countries with a large population that's underserved by traditional financial institutions, a growing middle class, and a real need for affordable housing solutions.
Yeah, that sounds like a lot of places around the world. Access to affordable financing is a huge barrier to home ownership in so many countries.
Exactly. So if this company could replicate their success on a global scale, it could be a real game changer.
I agree. It's an exciting prospect. But what do you think are some of the biggest challenges they would face in trying to go global?
Well, every market is unique, right? So they'd need to do their homework. They'd have to carefully analyze the local conditions, the regulations, the cultural nuances. It's not a one-size-fits-all kind of thing.
Makes sense.
They'd also need to think about how to adapt their technology platform and operational processes to different languages, currencies, legal frameworks.
Those are all important considerations. Going global always comes with its own set of complexities.
For sure, but the potential rewards are huge.
Yeah.
Imagine the impact they could have if they're able to bring this model of responsible, affordable lending to new markets.
It's an inspiring thought to make homeownership more accessible and disrupt the traditional financial industry in a positive way.
Right. It's disruption with a social conscience.
I love it.
Yeah.
But let's bring it back to their current operations in India for a moment. We've talked about their focus on Tier 2, 3, and 4 cities. Why do you think they've chosen to concentrate their efforts in those areas?
It's a really strategic move. They're looking at both growth potential and risk mitigation. Those cities are seeing rapid urbanization and economic development, so there's a lot of demand for housing.
Yeah, makes sense.
But at the same time, they're often overlooked by those bigger financial institutions that are more focused on the major metros.
So they're tapping into an underserved market with a lot of potential. But aren't those markets also inherently riskier? Wouldn't it be safer to stick to the big cities with more established economies?
There's always some level of risk involved in any lending operation. But this company has a very sophisticated risk assessment process. They're not just throwing money around. They're carefully evaluating every single loan application.
So they're doing their due diligence?
Yeah.
What kind of factors are they considering?
Things like income stability, credit history, property value. They're being very thorough.
So they're being prudent and strategic, not just chasing growth at any cost. That's reassuring. But you mentioned that those smaller cities are often overlooked by the bigger lenders. Why do you think that is?
I think for larger institutions, it can be more expensive and logistically challenging to operate in those areas. The infrastructure might not be as developed. They might not have the same access to data as they do in the big cities.
It's interesting that this company has been able to overcome those challenges.
They have. And I think sometimes there's a perception that these markets are too risky or not profitable enough.
But this company is proving those assumptions wrong.
Exactly. They're showing that you can operate successfully and responsibly in these markets. And they're achieving some pretty remarkable growth while they're at it.
It's really a testament to their vision and their ability to execute their strategy.
It really is.
So we've talked about their growth, their use of technology, their commitment to responsible lending. What do you think are some of the key factors that have contributed to their success?
Well, I think first and foremost, they have a very clear and focused strategy. They know exactly what market they're targeting, what needs they're addressing, and how they're going to get there.
A solid roadmap is essential.
Absolutely. And second, they've got a strong leadership team with a deep understanding of the Indian housing market.
Experience and expertise go a long way.
For sure.
Yeah.
And they've been able to attract and retain top talent, which is essential when you're trying to achieve ambitious goals.
Great leadership and a talented team. That's a powerful combination.
Mm.
What else would you add to that list of success factors?
Third, I think they're incredibly agile and adaptable. They're not afraid to embrace new technologies and adjust their strategies as needed.
They're not letting themselves get stuck in the old ways of doing things.
Right. They're constantly innovating and evolving, which is crucial in today's fast-paced world.
Couldn't agree more. Anything else?
Yeah, I think their success also comes from their genuine commitment to their customers and their employees. They've created a culture of trust and respect, and that translates into high levels of customer satisfaction and employee engagement.
It sounds like they've found a winning formula. They're growing rapidly, they're profitable, they're making a positive social impact, and they're doing it all in an ethical and responsible way.
It's a pretty inspiring story.
It really is. They're a company worth watching. I wouldn't be surprised to see them expanding their reach even further in the coming years.
I agree. They have a lot of potential.
Well, we've covered a lot of ground today. We've really delved deep into this company's business model, their strategy, their impact. I'm sure there are many more insights to be gleaned from their story, but
Definitely. There's always more to learn.
I think we've given our listeners a good overview of what makes this company so unique and successful.
We've given them a good starting point.
And I think they've also given us some food for thought about the role of finance in driving positive change. They're really setting a fantastic example, aren't they? Showing the world that you can do well by doing good.
Couldn't agree more. It's so refreshing to see a company that's not just focused on the bottom line, but also on making a real difference.
They're not just chasing profits. They're trying to make homeownership more accessible for people, and they're doing it the right way.
Absolutely. No cutting corners.
Yeah.
No exploiting their customers. It's all about building trust and transparency.
It really is a breath of fresh air in an industry that sometimes gets a bad rap.
You know, it's so important to see companies like this proving that you can be both profitable and ethical, that growth doesn't have to come at the expense of doing the right thing.
It's a message that really resonates with people, especially these days, when there's so much focus on corporate greed and inequality.
Absolutely. People are hungry for businesses that are doing things differently. Businesses that are putting people and the planet first.
And this company is definitely one of them. They're not perfect. No company is. But they're genuinely making an effort to operate in a way that benefits everyone.
It's so true. And that's what's so impressive. They're not just talking the talk, they're walking the walk.
They're putting their money where their mouth is, investing in technology to make things better for their customers, expanding into those underserved markets that other lenders have ignored, creating a workplace culture that values integrity.
They've really got it all figured out, haven't they?
It seems like they're growing. They're profitable, they're making a positive impact, and they're doing it all ethically and responsibly. It's truly an inspiring story.
It is. It's a real testament to the power of values-driven leadership.
They're proving that you don't have to choose between doing good and doing well. You really can do both.
And that's a powerful message for all those aspiring entrepreneurs and business leaders out there.
It's a great reminder that success isn't just about profits. It's about making a positive impact on the world.
Couldn't have said it better myself.
So as we wrap up this deep dive, what's the one key takeaway you want our listeners to remember?
I want them to remember that business can be a force for good in the world. That it's possible to build a company that's both successful and socially responsible.
Beautifully said. And I hope our listeners will also be inspired by this company's story, to think differently about the role of finance in society.
It's not just about making money, it's about making a difference.
Couldn't agree more. Well, on that note, it's time to bring this episode to a close.
It's been a pleasure chatting with you about this fascinating company.
The pleasure was all mine. And a huge thank you to our listeners for joining us on this deep dive. We hope you found it informative and inspiring. If you enjoyed this episode, please be sure to like, subscribe, and share it with your friends. And stay tuned for more deep dives into fascinating companies and industries right here on Insights That Matters.